Hey, hello everyone. Welcome to this week's market recap here for YouTube. I'm Chris with Elliott Wave Cafe. Let's take a look at the markets. We'll go ahead, as always, cover all the core markets from a technical picture here on my stock charts platform. Then we'll switch over to the Motive Wave and take a look at the Elliott Wave count in both the S&P 500 and Bitcoin, and I'll show a couple of other markets as well. So beautiful close to this week, 55, 54. The second extremely strong week, right? We've had that Monday. I think it was around August 5th when, we dropped strongly on Sunday night. We had some, few weeks of deleveraging, and then we hit that 40-week moving average. I talked about this last week, that the close was very strong, and it was likely that this, has the potential to continue, and with more confirmation above that 10-week moving average, which is that 50-day, right? So right now we're back above it. A couple of strong closes. Really hard to argue with the price action. I think we have a decent low in place, and by the way this looks, there's a serious potential that this market continues higher and makes new highs, and I'll show you the wave counts, but it could travel towards $6,000, maybe even by the end of the year, 6,000 by the end of the year. So that's the S&P on the weekly. Pretty decent picture. I like it. And you really can argue with the fact that the bulls came strongly back. So we'll see how it goes. The Nasdaq again, performance here 538 for the week, and extremely strong volume as well. It's just at that 50-day moving average, just kind of sticking its head above it, but looks like a fake breakdown below this trend line. And as you know, if something doesn't work as intended, for example, when you have a break of a trend and that doesn't continue, but instead you reverse, usually that's met with strong moves in the opposite direction. So I'm going to listen to the market here. I have increased my exposure seriously. I started increasing it last week, just kind of on a daily basis, little by little, and then I became more aggressive this week, kind of throughout the week, and I'm almost at, I think I'm more than 90% invested at the moment, with about a 7 or 8% cash balance that I'm looking to deploy the following week, and maybe even go on margin if I see further signs of strength on the market. So I like what I see here. Semiconductors still have to fight through that 10-week, but again, a similar story there. Magnificent Seven, very, very strong performance. It's hard to argue with these stocks. Dow Jones creating another, bullish structure here through a sell-off, a little bit of a hammer with another bullish close. So these three candles taken in a package, I think they are telling you that the bulls are seriously mean business here, and they're going to try to take this and break 41K and move towards 42 over the upcoming weeks. So we'll watch that. I mean, look at the perfect touch of that 200-day moving average right below. Russell, it shook out a bunch of longs, myself included, that we got onto this trade on the breakout of that 210. It came back, it shook out with the break below the 210. We started to get out of there, but now reinitiating positions on a break back above it, and I'll show you the count. I think we have a decent flat formation here. It still has a lot of work to do, but the fact that we're not below this range, the fact that we're above it, I think that's a positive development, and we gotta listen to it. So that's my take on that. Bitcoin, it's still a bit iffy. I'll show you the count, but I continue to see this corrective. I'll talk about it, but I'm not gonna get into it until we start to break back above that 50-day moving average. There's still a bit more work to be done on Bitcoin to gain momentum, right? Because you wanted to buy it, a stock or a security, whatever, just when the momentum starts to break and to build, and not to have the money stuck waiting for too long. So that opportune moment, I don't think it's there yet in Bitcoin. So we'll talk about that. Ethereum, it's fairly weak here. It has a lot more work to do than Bitcoin to get back above those averages, and then it's going to have my interest. US 10-year yields are stable. US dollar broke this kind of longer term uptrend in here. I know the trend lines could be a bit you have different ways of kind of drawing them, right? Subjective, I should say, but I think it's a pretty clear break to the downside, and that helps the gold, which is 25.37, extremely bullish close here on the weekly, new all-time highs. I think that's a bullish development, right? Nothing gets more bullish than trying to overtake the upside supply and running into fresh air. There is a potential that this is a fourth and you're in a fifth wave, but usually commodities have very extended fifth wave. So I would not argue with this bullish close in gold. I think that's extremely positive and has the potential to continue to run. If you're breaking back below 24.50, I would reconsider. But for right now, this close is very strong. And silver here shows a nice three-way setback, a retest of this 40-week moving average, a retest of the 26-27 zone. As soon as we crack towards 30, and even if you do a trend line from these highs and you start to break that, and as soon as you start to break that, then it's going to be a full-on rally, I think, above 32 and further. And then oil is in a nowhere's land, not interested. And then volatility index, this looks like it's been the biggest scam that they kind of put together here with the market by, whatever created that big sell-off, that big deleveraging, the yen carry, whatever that took, a very short period of time. They pushed it up to 62, 65. I don't even know how real that is, but we're back towards 14. So almost like a one night bad dream, and then we're back to normal. Anyway, that's kind of where I'm at with with the markets at the moment. So let me show you. This is the long-term chart, the quarterly chart in the S&P 500. We're going to continue to follow this along, in the years ahead as my main count. But now let's jump over and take a look at a few counts here. So the S&P, from a wave 2 low in October 2022, we're going in a 1, 2, 3, 4, and 5. Last week, we had, and I'm still, not 100% sure that this wave 2 doesn't belong here. This wave 2 purple, this does look like it's an impulsive move, so it's probably better suited to be counted like a 1, 2, 1, 2. I know this wave 2 is a bit longer than the larger degree, but this picture right here, the sell-off candle, the hammer, and this other candle that just closed here, again, that could be a very bullish formation. Now we're right at the X wave right there. Usually it's where you find resistance, so there could be a little bit of a pullback. That could be early next week, but once we get back above there, then the new highs are going to come under attack. Sure, you can always fail here and have WXYX and then another sell-off. I just don't think that the conditions are prime for that anymore. Market can always surprise, so we'll take it day by day. But again, just watch this level as we're coming into this upcoming week. And I know we're going to have the Fed, the Jackson Hole, and all of that coming. So there'll be some volatility. But this count here continues to be kind of the main one that I watch, looking for the stock market to continue to travel towards 6,000, 65, 7, and so on and so forth, until about 2025. Then we'll see, summer of 2025, and then we'll see from there. But that's the S&P. Let me show you quickly a NASDAQ Composite, which has a little bit of a cleaner wave count structure from the lows. 1, 2, 1, 2, 3, 4, and 5. The size of these waves is very weird because the corrective waves, even on the smaller degrees, they're larger than the one at the higher degrees. It's not as textbook as we would like it, but hey, this is the real life in markets, so we gotta make the best with what we have. But for me, some people would argue that this wave 2 is too short or that it needs to be deeper. When you're in an uptrend, you're not going to get, when you have a kind of a strong trending market, you're not going to get a wave 2 like a bear market that we've had in 2022, right? The size of that. Like, I understand that, this would look, much better if it does this and then it comes back lower, creates some kind of a head and shoulder here or something like that. And then you're coming all the way back to this way, and that's a wave 2. And then you go, I mean, it's a nice, pretty story. I just don't really see it happening. That's my view. You can have a different one, and you can, take shorts based on that or whatever. But, if we do break, and we start to fail and break back below key moving averages, right? All I'm looking is at the momentum. If we break below some of that, then all I got to do is just reduce exposure or hedge, and then we create some protection. So this is not all or nothing type of account, right? We're constantly adjusting and looking, see if something works, or if it doesn't, then we adjust. So that's on the Nasdaq. Dow Jones Industrial here. If you take a look, right, we have your 1-2. You had a big flat in here in another wave 2, and then this creates a very nice picture here. I'm looking for Dow to explode. It's a series of higher highs and higher lows. I like kind of how it looks. You have basically, a nice, like a nice channel in here. Let's see if we can copy paste that. Right, and once you break above it, right, that creates more of a stronger third wave, which is what I'm looking for in the Dow. And this is a nice, nice three-way setback, and here you have a nice ABC, another ABC, so 3, and then with a sharp drop in a wave 5, in 5 waves, or a wave C of a flat in 2. So that's Dow Jones. Then Russell, you can see here on the weekly. There was some discussions right here. I talked with our members about it as it was happening, and then, it has a few false starts. We initiated positions, went back, reinitiated them again. So there's a fight until a trend gets underway. I would like to see something like this starting to develop. A, B up in C, B wave, I think it's about 161.8 multiple of wave A. So we're all fine there. And then you drop sharp in C, and I will see if we have continuation in the Russell. We'll take it again one day at a time. And if you want to see the fib, all I got to do is hit a tab, and then it shows me exactly the fibs where we are with them on this kind of B wave, B versus A, in terms of a flat formation. And then, this is IBIT. I put this on Twitter a couple of times. I'm watching this, but we'll jump over and take a look at Bitcoin instead. But this is the count on IBIT. So let me switch over to Bitcoin here on the 2-week chart. Cycle wave 2, wave 1, wave 2. Or you can take this wave 1 and put in here into a flat. I don't really care for it. But again, 1, 2, 3, 4, nice into the 38.2%, and we can get an extended fifth wave. Or maybe this is another 1, 2, and then that explodes higher in a larger third towards the top of the channel. Taking Bitcoin to $256,000, over the next, 3-4 years, maybe. Let me take a look on time. Things take longer than we always expect, to the downside and to the upside. So, if you were to hit somewhere here, just on a normal, pushes you up to the summer of 2026. So that's a couple of years from now, possibly, if this wave gets underway. Let me take you now and show you to the weekly time frames, and we'll go over to the subdivisions here. So you have your 1, 2, 3, 4, 5 for a wave 1 red, 2, 1, 2, 3, 4, 5, nice, and then you come and do a pretty complex correction right there, and you have it right here a little bit more with the subdivision. So small W with an X, a little bit longer Y wave, another X, and then a much longer Z wave. 1, 2, 3, 4, and 5. Then a B wave up, back to the resistance, sharp drop, cleaning everybody out into the 38.2, C of Z of 4. And now we're looking for this to be maybe, like a wave 1 and 2. So this is kind of the next. Let me see if I have it here. If not, we can put it up on the chart. But, basically this would be a wave 1 and a wave 2. And then if I do some fibs, retracements, let's take a look at that. Right, you would be, we hit about 38.2. You can still drop down to about 61.8, but I would not want to see this Bitcoin get much below, the swing low, which coincides with about 54K, 53.98, right? That's ideally what you want to hold on a wave 2 pullback. This does look corrective. So what the expectation is that we would go and break above this level, 62.17. And once we do, I think that's the signal. That's going to be above the 50-day moving average. And that will be the signal that Bitcoin might be ready to begin a larger third wave to the upside and threaten 70,000. Until then, I don't think there's any rush right now. I would be just, waiting for it to, to develop. So watch it over the weekend. I'll write about it on Monday and do a video on Tuesday again and see kind of where we are, see what happens over the weekend. But that's the expectation, right? That this fourth wave, it's already complete through a very sharp drop. And then right now we're beginning the next sequence in a wave 1, 2, 3, 4, 5. So we could do, something like that. So this is just the next, just do it live here. I just got to anchor that wave and then, so, that's the idea. I mean, it might not be that sharp because you're probably going to have another wave 1 and another 2 in here. And, it's not, things take time. So it might look something like that by the time, it starts to develop and all. But again, bottom line is like if you drop below 54K, then we got to revisit this. It's not a broken count. It's not invalid until you're actually getting below this low, right? But then that, any bullish exposure has to be tamed back. That's why for me, I don't want to get into it until I see signs of strength. And so far, they're working on it, but it needs a bit more. So anyway, thanks, for being here. Check out ElliotWaveCafe.com on Substack, and I'll see you all next week. I have some free stuff on the newsletter as well, so go ahead and join that. But thanks for watching as always, and I'll talk to you later. Bye-bye.